All right, everybody. So in this video, we're going to be going over what is the enhanced asset or what is the IUL, right? So the IUL, but we call it the enhanced asset, is an index universal life insurance policy, but it is a type of permanent life insurance that offers both a death benefit and a cash value component. It's designed to provide policyholders with the opportunity to accumulate cash value over time while also offering flexible premiums, right? And so then the next question probably is, okay, so then what are some key benefits or some key features of an IUL? Well, the main key features of the enhanced asset or our IUL is that there are many tax benefits, which I'll dive into in just a second. You could also take out policy loans. There's also a death benefit that you get to take advantage of. And you have the flexible premiums. You have principal protection. Your money is growing in an index-based growth strategy. And you have the cash value component. So let's dive into each one of these a little bit deeper. So the death benefit. Like other life insurance policies, an IUL provides a death benefit that is paid out to beneficiaries upon the policyholder's death. This benefit is typically income tax free. And so that's a huge feature to the IUL is the death benefit. The next key feature is the cash value component. A portion of the premium payments made by the policyholder is allocated to the cash value account, which grows over time. The cash value can be accessed and used by the policyholder during their lifetime, which is awesome. You're basically treating this as like a high-yield savings account on steroids. All right. Then there's the index growth part of the IUL, right? The cash value in an IUL is often tied to the performance of one or more stock market indexes, such as the S&P 500. The cash value has the potential to grow based on the performance of these indices, right? And so you get to choose which indices you want your money to be tied to, right? And it's index growth, which means you can only participate in the upward trend of the stock market without ever participating in the downward trend, right? Which is where principal protection comes in, right? One of the key features of an IUL is that it typically includes a minimum guaranteed interest rate, right? Most of the time it's a 0% floor, which means that the cash value is protected from market downturns and will not go below a specified level, even if the index performs poorly, right? So the risk of investing into the stock market is that you could lose your money, right? If the stock market doesn't perform, then you could lose money. But if you invest in the stock market through an IUL, you have that downside protection, you have the 0% floor, you have that principal protection, which is a huge key benefit, right? Then we have the flexible premiums. So policyholders have the flexibility to adjust their premium payments with certain limits. This means that they can pay more or less in premiums depending on their financial situation, which is why I say that you can treat the IUL like a high-yield savings account on steroids, right? You can decide to save as much as you'd like or to save as little as you'd like with certain limitations, but we structure it to fit within your needs. Then we have the tax benefits. These are huge. So the cash value in an IUL can grow on a tax-deferred basis, and withdrawals and loans taken from the policy are generally income tax-free as long as the policy remains in force, right? So what is this basically saying? Well, there are three main tax codes associated with IUL. Tax code 7702 allows you to access your money at any age tax-free and penalty-free from the IUL. Tax code 72E allows the money inside of the IUL to earn interest tax-free. And tax code 101A allows the beneficiaries to receive your death benefit tax-free, which is huge. And then there are the policy loans. So the policy holders can take loans against the cash value of the policy. These loans do not have to be repaid, but any outstanding loans will reduce the death benefit if not repaid, which is awesome. So you can take out as many loans as you'd like. You never have to pay them back, right? And if you do pay it, and if you don't pay them back, well, whatever the outstanding loan balance is will just get covered by your death benefit. So Index Universal Life is often used as a tool for long-term financial planning, wealth accumulation, and retirement income strategies. It's important to work with a financial advisor or an insurance professional to fully understand the policy terms, costs, and benefits to ensure that the IUL is suitable for your specific financial goals and circumstances, right? And so you guys can use the link below this video in the description, or if you're watching on Instagram or TikTok or on Reels, you can go ahead and just click the link in our bio to book a one-on-one meeting with myself or one of our associates so that we can build out a financial plan for you. We can structure the IUL either for wealth accumulation or as just like a high yield savings account, or for college planning, or for infinite banking, or for retirement income strategies. It doesn't matter, right? We want to have a full understanding of what your financial goals are so that we can structure the IUL around that. The IUL is the best financial foundational account or tool that you can have because you can just stack on top of it so well. So with that being said, again, go ahead, use the links down below to book a spot on our calendar so that we can go ahead and just do a quick financial plan with you. We can answer any questions that you have about the IUL. If you want to learn more about the IUL, go ahead and book that time with us so that we can go ahead and do that. And again, thank you for watching, and share this with friends and family or anybody else who you think could benefit from an IUL.